A 76% drop. That is how much value this token has lost since hitting its peak, all in under 3 months. The token is called based, and right now you have to decide if you are looking at a rare, steep discount on a solid asset, or if you are about to reach out and grab a falling knife. To understand the speed of this collapse, consider the timeline. The project only launched this past March. Evaluating whether it's safe to buy in today requires looking past the front-facing application and checking the background data that most retail investors completely ignore. If you want to navigate a sell-off this massive, you have to strictly separate the utility of the underlying technology from the mathematical reality of the token itself. This architecture map shows a central hub called Based One. It is a DeFi super app built directly on top of the Hyperliquid ecosystem. The application breaks down into 3 distinct functions. The first is a standard spot trading platform.
The second branch handles prediction markets, allowing users to wager on binary outcomes. And the third offers a decentralized crypto spending card for real-world purchases. Instead of forcing users to manage multiple wallets across different protocols, this integrates 3 separate financial tools into a single, unified interface. The developers building this ecosystem operate under the name Based Labs. The team is not fully public yet. Using their platform requires an inherent level of trust from the user to interact with anonymous developers. Despite the anonymity, they shipped a working product that solves a real friction point in crypto. The initial market hype and early capital investment made total sense. But a highly functional app does not equal a safe investment. Right now, the Base token has a market cap sitting near $16.5 million. This chart represents the absolute maximum supply for Based, a hard cap of 1 billion tokens. Out of that billion, only 235 million tokens are circulating today. That leaves a massive 70% of the total supply completely locked up. These locked tokens are waiting on a strict schedule to be handed over to early backers and project insiders. When those tokens unlock and enter the market, the supply inflates. If demand doesn't aggressively rise to match it, the value of the circulating tokens drops. This is dilution risk. We have historical proof of how the market reacts to this. Previous token releases for Based have already triggered immediate, sharp price dumps. Buying this token early means choosing to face an incoming wave of fresh supply. No matter how smoothly the app functions, the underlying math heavily suppresses the long-term price. This line chart maps the real-world effect of dilution fear, tracking the token's drop down to exactly 7 cents. Looking back, the all-time high reached roughly 31 cents before the floor gave out, hitting peak momentum weeks after the March launch. Today, the broader market sentiment around the token is deeply cautious. This view shows the recent low near 5 cents, the critical support floor. The narrow margin up to 7 cents leaves traders little room for error. If a token unlock drops the price below 5 cents, there is no historical support to catch the fall. Any buying pressure generated by new users testing out the app is consistently absorbed by investors selling ahead of the next scheduled supply increase. Looking at this dual pathway flowchart, navigating this project depends entirely on how you intend to use it. First, consider the people who simply want to use the Based One super app for its financial tools. You get the full benefit of a fast, unified platform without ever needing to take on the risk of holding the highly speculative Base token. Next are the speculative traders looking to capture short-term volatility. Keep your eyes locked on that 5-cent support line. Keep your stop losses incredibly tight and your time frames short. Finally, there are the long-term investors hoping to buy the dip and hold out for a return to all-time highs. Taking a long position right now puts you directly in the path of that remaining 70% supply. You are betting directly against impending dilution. This makes Based a strictly speculative, early-stage bet. If you are looking for a safe asset for a long-term hold, this is an active avoid. If you believe in the technology, wait. Let the project release its insider shares and wait until the supply schedule flattens out before committing your capital. Based One is a functional product that solves a real problem, but until the math levels out, its toxic tokenomics make it a highly dangerous investment.